What is up, guys? My name is Matthew and welcome to my channel. Today let's talk about what you should do in order to prepare for the next upcoming stock market crash. We know that the stock market has been really uneasy lately and there's been so much FUD, the fear, uncertainty, and doubt that we just really don't know when the market's going to crash. There's been talks about rising bond yields and just the anticipation that we're going to see higher inflation in the future. We've seen Mr. Fed Jerome Powell just, print money, so we really do not know when the next stock market crash will be, but I think it's good to have a plan going into this next stock market crash so we're prepared and ready to take advantage of any opportunities that come to us. You might want to listen really closely to what I'm saying in this video, because if you act too late, it might be too late for you to take advantage of these opportunities. Some of the things that I'm going to say are very time sensitive. Going into the first one, to prepare for a stock market crash, it's really important that we start penny pinching right now. I don't know who needs to hear this, but online shopping and shopping online for your favorite clothes and your favorite shoes is probably not the best thing to do at this moment in time. Yes, I know that it's really tempting and we can kind of get carried away sometimes. Just take it from me that it's probably not the best time to start spending your money now. Since there's been so much market uncertainty as of late, we've seen the stock market be very volatile with red days, green days, mainly red days though. And we really want to make sure that we take advantage of the market uncertainty. Since the stock market doesn't like uncertainty, it's going to react negatively. And when it reacts negatively, we want to buy into those pullbacks, but we need money in order to buy into those pullbacks, right? So I think that one of the things that we can do going forward is to have a plan to penny pinch and save up a cash pile in order to have money to deploy into our favorite investments. One of the things that I like to do is not going grocery shopping when you're hungry. And I actually saw a statistic online that read, those who were hungrier had spent 64% more money than those who were less hungry. So just off that, I think that when you go grocery shopping, just have a list and just buy whatever is on that list. Don't get tempted in the chocolate aisle and try to buy all the candies and eat everything up, because it's probably not good for your health and it's probably not good for your financial standing either. I think one of the best things to start trying to track your money is to have an app that tracks your money for you. So something like a Mint or something like Microsoft Excel where you can do it yourself. I really like Mint because it tells me what I'm spending, how much I'm earning in income, and where my money is going to. I get to see how much money is going out and how much money is going in. And you really track everything to the dollar, because you can link everything such as credit cards, brokerage accounts, real estate, and even your debt. So it kind of gives you a really true valuation of how much you're really valued and your net worth. So I think it's a really helpful tool and everybody should be using it. Just remember that a penny a day allows for plenty to stay. Let that stick for a moment. Then going into the next one, we got to talk about how you need to contribute to that Roth IRA. The Roth IRA is just a tax account that allows you to invest tax-free and pull out your money at 59.5 years old tax-free. And this is one of the best accounts that any person can get. It's an account that people can just have in order to fight the tax system.
It's really important.
Right now it's March and we need to make sure that we contribute to the Roth IRA before April 15th, just because that's the last day that you can contribute to the 2020 contribution for the Roth IRA. And if you're under 50 years old, it's going to be a $6,000 contribution. You can contribute a maximum of $6,000 per year to the Roth IRA, and you really want to make sure that you're trying to max it out as much as you can. And if you can't max it out, just put in as much as you can. That's perfectly okay. One of the important things is that they limit it to how much you can contribute every year. And you really want to try to max it out. If I can go back to my 18-year-old self and tell myself to invest in that Roth IRA, then I definitely would, because I know that I had some money at that time that I could put into there, but I missed out on that year to contribute. Once you're in your late 50s and in your 60s, you're really going to thank yourself for how much you disciplined yourself when you were 20, 30, even 40. When you invest, time is the best thing on your side, and that's even better than contributing more, because the longer you have, the more money you'll be able to gain. If you run the numbers and you run an example, time will always beat contributing more money, and you're going to be able to make more money as time goes on. Going to the next one, you really want to make sure that you're conducting research on the stocks, on the investments that you want to make for the long run now. And just remember that there's not much time when the stock market crashes or when any other market crashes. You really have to take advantage now in preparation of what's going to happen. So you should really be looking into your potential investments and making sure to see what price you would want to buy these investments at, and if the valuation makes sense to you. If you're able to have that peace in mind that you're only willing to pay this much for this investment, then I think you go in with a more clear path and a more clear plan. So do the dirty work now and do all the research you can now so you understand a true valuation of that investment. And once that investment drops down in value, then you'll be able to scoop up that investment for that price that you were willing to pay at. It's easy to see red, red, red and think, okay, it can go lower, it can go lower. One of the best tactics to invest is to dollar cost average, and that's just to buy as the market drops because you're lowering your cost per share and you're just really getting more for less. I think that everybody should look at this as if you're a kid in the candy store and there's one really big bar that you like, but on the next day that you're there, there's 10 big bars that's there for the same price. So as a kid, you know, you're gonna want the 10 candy bars. And one of the things that I see as a kid, as the child that I am, is I want 10 candy bars rather than that one. So it makes sense, right? If that didn't make sense, let me know. Some of the things that I recommend to do in order to prepare is just to do research on the financials, look at their last earnings, and make sure you're looking through their slide decks, and you can even do research by just looking up videos on YouTube. I'm sure there's other YouTubers out there that do deep fundamental analysis on different companies, and you could really just listen to other people's perspectives and just kind of gather all this information and make your opinion for yourself. Remember just to keep on looking if you want to find that pudding. I don't know if that rhymed.
What career? But I'm not a rapper. What career?
Next, you need to make sure that you're planning out and writing down that watch list for your stocks that you want to buy in the long term. One of the things that you can do is write a sticky note with the stocks on them, with how much you're willing to pay for them. And once you have that, you could put that sticky note on your desk, so when you're looking at it every single day, you're like, okay, I know I'm only going to buy Apple at $120 a share. It makes sense because psychologically you've ingrained into your mind that you will buy when it hits this price. And if you wrote down a price that you were willing to pay for that equity, that stock, then once it drops lower than that, it would make sense that you should be able to purchase more because you were willing to pay higher than that in the first place. These should be your favorite companies that you've researched into the company and you totally like the management team as well as the business that they're doing. This is a good way to not get lost in whatever's happening in the economy and just to make sure that you're not getting lost in the negative, red, red, red every single day that you think that you could buy lower, because sometimes you can't really time the bottom. So one of the best things that we can do is just buy and buy as the stock market drops. It's really easy to look at the stock market and see that it's dropping every single day and try to buy the bottom. Take it from me that when you try to buy the bottom, it never really works out. Just keep on buying the dip, and I know that it might feel like once you buy the dip, it keeps on dipping. You kind of just have to go in with the mind that you can stomach the risk and that later on in the future that these investments will be worth more than what they're worth today. You better make that list so no opportunities are missed. And going into the next one, just make sure that you do not sell your investments. Some people just see the market go lower and lower every single day and just get scared out of the market in general. So then they start selling their stocks and they start getting scared of the stock market and just never touch it ever again because they just lose money. Some of the things that you should think about is that you invested in this company in the first place and you saw potential in this company. Your overall thesis of the company and how they should perform shouldn't change whether the stock is trading $10 lower than what they were trading at or $20 lower than what they're trading at. It doesn't really make sense to sell your investments when you really believe in that company long term. It's really easy to panic with other people when everybody else is panicking and sell your stocks. If you can ask yourself why you bought that stock in the first place, then you should be able to have peace in mind of why you bought it and why it's going to do well in the future. Just stick to that mindset because I guarantee you that it will help you when you're really tempted to sell your stocks. Just make sure that you're not selling any stocks unless the business fundamentally changes and something that happens in the business is something that you don't like. Let's say they get a new management team that is really messing up the business, then it's okay to drop them. But just because the stock price is going lower shouldn't be a reason to sell. You have to be prepared for the stock market to mess with your emotions, but do not let the emotions control your actions. Some of the actions that you can do, just take a breather, just go out for a walk. Don't look at the market. We really want to look at the companies and think, what is the company going to do in the next 3 to 5 to 7 years? So we really want to look into the future and see the growth opportunity or the long-term opportunity to gain for this company. Last but not least, it's so important to stay calm. And patience is really a virtue in this game of investing. Patience goes as far as doing research late at night, doing research for hours and hours, and just kind of waiting for your stocks to plan out and just kind of have that bold thesis go to plan. Make sure that your emotions are not taking advantage of your actions. And we really want to make sure that every single thing that we're doing in this market is kind of with good rationale. And we want to make the best decisions for our long-term selves in the future. I hope you all have cash and are ready to splash into this market. Make sure that you're pumped and ready to dump all your cash into your favorite investments. Just remember, short-term gain equals long-term pain. Let it stick for a moment. That being said, I hope you guys really enjoyed this video, and I really hope that you guys were to gain some value from this video as well. Make sure you like, subscribe, and comment on this video your favorite stocks that you want to buy for the long term. I see you right there. Just comment down below your favorite stock for the long term. Let's battle it out inside the comment section. Make sure you check out my Instagram if you want to see some cool updates on my stock market portfolio. I hope you have a great day, and peace out.